Good morning, everyone, and welcome to the CDBG Certification Training Webinar 5. Today, joining us, we have Steve Charleston, Amber Ward, Katie Myluka, Tom Stevens, and Nick Trapensky. We will be discussing program income and financials for the CDBG program. Amber, can you click on the next slide? Next two slides. Perfect, thank you. And I'm going to turn it over to Nick Trapensky. He's going to kick us off with program income.
Good morning. My name is Nick Trapensky. I'm the Workforce Housing Specialist on the housing team, but I also do CDBG program income on the housing side. It was kind of other duties as assigned. Can I?
Yep. Oh,
Amber has the slides.
Yep.
Okay. So program income, this is the best CDBG topic. I might be a little biased, but so just kind of overall, there's two types of two types of program income that you'll see in our manuals and our annual action plan. And there's the state program income, and then there's a local program income. Local program income is in housing and economic development, and we are going to be talking about local program income. Slide, please. So what is program income? Ooh, can I just have that? So the CFR defines program income as gross income received by a unit of local government or a subrecipient that was generated from the use of CDBG funds. So that's like the regulatory language. Pretty much it is any sort of income that is generated or earned by the existence of a CDBG grant. Slide, please. So program income includes, this is just a list, the next two slides, just a list that's from our manual. I'm not going to read all of them, but program income come back a lot of different ways. And yeah, I'm not going to read all of these, but it's pretty much any sort of income that is generated from your grant. Slide, please. And go to one more. One more. Thank you. So another definition that we need to kind of get out of the way is continuing the same activity. So federal regulation allows the state to require the return of program income, provided the local government has an opportunity to retain program income if the program income was used to continue the activity from which it was derived. And then we as the state define what continuing the same activity means. So an example is if it's a housing program, an owner-occupied rehab program, and that grant generated program income, continuing the same activity would be another owner-occupied rehab project. Slide, please. So that was just kind of an overview, and then I'm just going to discuss housing program income, and Tom Stevens is going to go on to economic development. Okay, so housing program income. We primarily only do owner-occupied rehab, and program income will come back to the unit of local government in three different ways typically. So the proceeds from the disposition by sale, payments of principal and interest on loans, and interest earned on your separate CDBG bank account. So let's do an example. So as I mentioned, we as a state, we prioritize owner-occupied rehab. So the Smith family in Columbus received an owner-occupied rehab loan 3 years ago and have a contractual agreement with Columbus to occupy their home for a period of 5 years, so the 5-year affordability period. The terms of this agreement require a 0% interest forgivable loan after occupancy of the home for 5 years. So they just have to stay there for 5 years, no payments, no monthly payments, and then the loan is forgiven. But the Smith family maybe got a new job and they moved from the home after 3 years. So there's still 24 months or 2 years remaining on their affordability period. So the Smith family needs to repay that 24 months remaining on the agreement out of the sales price from their house to the city of Columbus. So now Columbus must ensure that the funds are paid or funds repaid are deposited into a separate designated account, and then they'll start reporting to DED. Next slide. So now that Columbus has program income, what do you do with it? So there's a few options. You can just return the program income funds to DED, write a check, and say we generated this money, and then we put that money in our state revolving loan fund, and then we can do more projects or award more projects. They can retain the program income within a reuse account and continue the same activity. So let's say they got the money back, they can, get another eligible applicant and go do another rehab. So that would be continuing the same activity. They can deposit and use it within their existing housing revolving loan fund, or RLF. We are not doing new ones, so some communities do have an existing RLF, and they're receiving payments or sometimes recapture. They can establish and deposit a local housing revolving loan fund. We are currently not allowing new RLFs. We're trying to kind of clean up some of the program income accounts. So currently we're not establishing new RLFs, but that's kind of a very detailed topic. From 2019 and 2020, about 2 years ago, we did repurposing. So what's repurposing? So I left this on there. It's not an eligible thing right now, but 2 years ago after the floods, we had a lot of local program income accounts. We had a little over 90, and we kind of wanted to allow some flexibility with those accounts to, address maybe some infrastructure needs. So since we define continuing the same activity, we allowed any program income account to go through a process and transition their fund into a different activity. So for example, if they had a local housing revolving loan fund and it was, inactive, or they had some other priorities, they went through a process and repurposed that funding source into, maybe some ADA improvements or some other infrastructure project. So I left this on here because as you're working with communities, you may see a repurposed project, and the reports kind of look a little funny just because it's no longer housing, it's, sidewalks or something like that. But if you have questions about that, reach out to me or Tom Stevens, and we can discuss that more in depth. They're very specific projects. So slide, please. Okay, so back to our example. Columbus can now reuse the program income, continue the same activity as their program guidelines dictate. So they're going to continue their program guidelines so that they were doing owner-occupied rehab and down payment assistance. We currently do not allow down payment assistance, but there are some communities that have grandfathered in, and so you might see that on some communities. However, if that original grant is still open, they're still in a contract period, they have to use that program income before they draw down new money. So open grant, program income's generated, you got to spend that first. Make sure you're doing that. Slide, please. Okay, so there are two different kinds of program income accounts you're going to run across in communities. This has been kind of a confusing topic. We've been trying to kind of get people straightened out. So there's housing revolving loan funds and reuse accounts. And in program income, we have kind of a language problem. We use the term reuse a lot of different ways. But in here, we have RLFs and reuse accounts. So what's a housing revolving loan fund? So this is a separate fund that is to carry out very specific activities. So the owner-occupied rehab, they can, let's say the assistance was repayable loans, so that the unit of local government is getting monthly payments from those homeowners. And then they have to continue that same activity. So continue doing owner-occupied rehab, nothing else. All program income received in an RLF account never loses its identity as program income. This will kind of make a little more sense once we can compare to reuse accounts. Is that going to go on? Oh, go back one. Sorry, there's some sound. They're doing some construction or something here at the state office building. Okay, so these payments to RLF must be, so let's say, RLF accounts need to be substantially dispersed before additional grant funds are be drawn down from the Treasury. So if, let's say, they have, it is really distracting. So if they have an RLF account and they get a new grant, even though they already have money on hand, they have to substantially spend that down prior to using new owner-occupied rehab grant funds. Slide, please. Okay, reuse accounts. So a reuse account is a separate fund established to carry out specific activities that do not generate payments to the account. So this is where you'd find like forgivable loans. All the homeowners, they just have their affordability period. They're not, paying monthly payments, and they just have to live out their affordability period. So if money is generated and the grant is open, program income must be dispersed before additional grant funds are drawn down from the Treasury. So back to our example, if Columbus got money back and their grant's still open, they got to spend that first. If the grant is closed, the program income will be considered part of the unit of local government's most recently awarded open grant, regardless of activity. So what does that mean in real life? If Columbus had their owner-occupied rehab program and they got money back and the grant is closed, that was an old contract, and let's say they have a DTR project or another public works project, they have to spend, even though it was generated from a housing activity, they have to go spend that in their most recently awarded open, DTR grant. And reuse accounts are subject to something we call the $35,000 rule. So what is that? Slide, please. So in the CFR, there's this thing about this $35,000 limit, and it only pertains to reuse accounts. So what it means is if at the end of the calendar year, the total amount received in a reuse account by the unit of local government doesn't exceed $35,000, it is no longer reported as program income. So back to our Columbus example, after, if there was a 5-year affordability period and they only had 2 years left, obviously whatever, they got $25,000 in assistance, whatever money came back it's not going to exceed $35,000. You got to wait till the end of the calendar year, so after December. So after December, if the program income received in that year doesn't exceed $35,000, we call it deobligation. So that income is deobligated to the unit of local government, and they could use it. It's not program income, so it's not subject to any more regulations. They can go buy some library books or something. So this only applies to reuse accounts, though, not revolving loan funds. So if you remember back a couple slides, the revolving loan funds, all program income received, whether it's monthly payments or recapture from a sale of a house, it's always program income. It's never deobligated. So we don't want to see anyone deobligating money out of an RLF. All right, next slide. And now we have an example reporting.
We're going to just take a few moments. Amber, I'm going to pull up the example and then share my screen. So 1 second.
Okay, so I'm assuming you can all see that. This is a program income report.
And this is all in your guys' handouts. This is the 01 handout, W5 housing program income report. If you want to follow along and take some additional notes.
Before we get into this, on our website, every time you do a program income report, so our reporting periods are January through June, and then that report's due by the end of July, and then July through December, those reports are due by the end of January. And when you're doing either economic development or housing program income reports, you have to do this, get this certification filled out by the chief elected official, and it's just put on their letterhead. It's just certifying that the numbers are accurate to the best of their knowledge. And then then just mark the little box, whichever one you're referring to. Okay, so it's probably most easier to go through an example. So when you start working with communities and they have a program income account, you're going to want to ask, let me see all your program income reports. So they might, only have a couple of years. There's some program income accounts that are older than I am, and I'm in my 30s. So they're going to have old reports, and every single report kind of builds off the last one. So you're always going to kind of have last reporting period while you're filling out the new one for the new reporting period. So on the left side, it's just basic information, contact information. I was watching a lot of Game of Thrones when I was doing this example, if you can't tell. So grantee contact, a lot of times that's, the local clerk or, treasurer. Certified administrator, that's you, of course. And where that separate CDBG bank account is held, last 4 digits, list the grants that have generated program income. Some might just have one. There are others that, they've had several, housing OR grants, so they might have a lot of different grants. And then the most recent program guidelines. That matters because even if, like, let's say this was a 2014, let's say there's a 2014 and a 2018 grant for this municipality. Even though the program guidelines might have changed between 2014 and 2018, so we want that program income account to be using their most recent approved program guidelines. So also when you start working with a community and you're asking for the program income account, their program income reports, you also want to go by their program guidelines. And really quick, I don't think I mentioned this earlier. So as they're continuing the same activity, doing more owner-occupied rehabs, it's pretty much functionally like an open grant. So you got to do, environmental review, all the things you would normally do with a just a brand new owner-occupied rehab account. But obviously they're just older. They're outside of a contract period. Okay, then on the right side, this is kind of where the real meat of it is. So there's a little box up here, and it just says, check here if no program income has been received or expenditures and the account balance is 0. So when would you check this? So there are some program income accounts that, let's say they were all forgivable loans. So they might have, 10 homeowners in an affordability period. They're not, unless someone moves out of their house, they're not going to be generating any program income. So they can, if they don't generate any program income and they're just in their affordability period, you check the box, you fill out page 2, which we're going to get to that in a second, and then you're done. So it's just kind of a quick little way to take care of this section. But that is not the case here. So we actually had some program income generated. So if you notice, this is a December 31st report, so a year-end report, and these are a little bit more involved. We require a bank statement, and this is also when, if it's a reuse account, that $35,000 rule is applied. It does not apply in June 30 because remember it's at the end of the calendar year. So you're going to determine, is it a reuse account? Is it a revolving loan fund? Kind of a just quick way to determine if the program guidelines or the program is generating any sort of monthly payment, repayable loan. Repayment should kind of trigger in your mind that it is an RLF, or revolving loan fund. It's just a forgivable loans, or they're all forgivable loans. Then that's a reuse account because they're not generating. They're not generating any payments. So you're going to look for your June 30th report or the past reports, and then you just carry over the beginning balance, or what would be the ending balance from June 30. So the beginning balance for this reporting period is $12,000. So why did I pick $12,000? Why did I just do 0? Functionally, when you're working with communities, everybody has a current balance. So it's always kind of complicated, and that's why I mentioned always ask for the previous program income report so you know kind of the history of the program and where they're starting. So they have to have $12,000 already on hand. That might have been generated 5 years ago. Who knows? But for some reason, they have $12,000 on hand. So back to our Columbus example, let's say they had a sale of a property during an affordability period. They repaid the portion of the loan they still owed, and it was $10,000. So we call that recapture because we were recapturing the investment that that beneficiary received. So $10,000 in recapture, the interest earned on that separate CDBG bank account. So $25 from the bank, so they have pretty good interest rates. So then you just add it up. So recaptured funds of $10,000, the interest from the bank. So they generated $10,025 for that reporting period. So from July through December 31st, they generated $10,025. Also, so they maybe had an applicant, they did another minor rehab, they spent some money on an eligible activity, which would be rehab. So they spent, let's say that same reporting period, they spent $8,000. That one activity, the certified admin, local government, they took $400 for housing management, $200 from general admin. So those were expenditures from the account. So you just add all those up. So for the same reporting period, they spent $8,600. And then you just do the math. So $12,000 beginning balance plus the amount that came into the account, $10,025 minus your expenditures, which leaves them with a balance of $13,425. So this is an RLF, and the same thing, it's generating monthly payments. So then that would be listed here for loan repayments. Maybe they'd have some recapture that can happen. But if this is an ongoing RLF, then you're done. So you can stop there if this is your final number. However, this is a reuse account. So we got a little bit more work to do. Okay, so remember this applies to December 31st accounts only, so end of the year. So you can't actually do this section until at least January 1st. You got to wait till obviously the end of the year. So during this calendar year, from January through December, they generated $10,025 from this reporting period, and we're just going to assume that from January through the end of June, the bank also paid them $25 in interest. So $25 in interest from the previous reporting period. So that's why you need that other report, the first report, and then add that to what was generated this reporting period. So that's a total of $10,050 that was generated during this calendar year. Well, this is a reuse account, so they can deobligate that money. So sometimes, they have to go to city council or something like that. It depends on what the local unit of local government requires, but they can deobligate that $10,000. And like I said earlier, I think buy library books, whatever they want to do with it. It's no longer program income. So you have your ending balance, and then your deobligated amount. You're going to take that away, and then now you have an ending balance after deobligation of $3,375. So now what do you do with it? Because if you're left with, after deobligation, the unit of local government, they're normally happy about that. But you got, $3,300 left, $3,400 roughly. That is not enough to do another rehab. So this is, in the past, we've gotten in kind of this quagmire where we have all these little accounts. So there's, tons of these little accounts that have, very small amounts that are just kind of stuck. So I would recommend you call me or email me and say, hey, I'm working with this community. They have a very small balance. What do we do with it? And I would highly recommend they return it to the state. It's too much risk to have that unit of local government just hold on to this. And like I said, we've had some communities that have been holding small amounts for a very, very long time. So just close it. You no longer have to report on it. It's easier for everybody. Okay, so now you're done with this section.
Hey, Nick, before you move on, can you tell us on your expenditures, is there a cap amount you can use for housing management and general admin?
That is a very good question, Rebecca. So it has to go by whatever program guidelines they're using. So they outline typically in their program, well, they have to in their program guidelines, what their housing management and general admin caps are. So just go by whatever it says in the program guidelines. Here and there, it can range from 10%. Like most recently, we've been allowing 12% for housing management, 8% for general admin. Sometimes it can range a little bit, and let's say there's some legal fees for like a reconveyance or something like that. So it might be a little bit loose, but yeah, in general, how much can you charge for housing management and general admin? Consult the program guidelines that you're using.
And also Chapter 8 of the manual, the CDBG program income. I believe it's Chapter 8. I don't have a manual in front of me.
Mm-hmm.
And it's based on receipts during
Correct.
the period?
Just receipts. So yeah, not the total balance. So don't be calculating off the total balance. It's how much came in that period. Okay, let's go to the next page. So the next couple pages, I have to put this disclaimer. This does not translate to our example on the first page. So these numbers are not going to correlate with the first page. But the next 2 pages, it's more than that in the actual report. This is where your beneficiary information is as it regards to their financials and what kind of assistance it was. So there's one for reuse, and the next one is for RLF. So this one, the reuse account. So you're going to list all the homeowners that received assistance. So the Martin family got $25,000. There was $2,000 in general admin housing management to take care of that project. Rehab started in June of 17. They completed it, entered into an affordability period in August of 2017. And this is all forgivable over 10 years, and 1/10 is forgiven per year. So remember, this was a 2020 December report. So that would mean that they are in their 3rd year. So as you complete these year to year, the only real thing that's going to change is the status. So just what year they're getting to. After year 10, you can start deleting these, and just they fall off, and they're done. They met the national objective, and they went through an affordability period, so they're no longer don't need to report on them anymore. So revolving loan fund, a little bit different information here at the top. Obviously, if we want to know the loan terms, if was there an interest rate, what was agreed upon for their term, monthly principal and interest payment, when did it originate, and then these cells are the only thing that's probably going to change on this report. I take that back. So these 2 columns are the only things that are going to change on this report. So as they pay down their loan, we like to see how much they got left. And then if they're current, delinquent, there's a couple options. But if you're having homeowners that are very, very delinquent, I've seen some that have been delinquent for like, 10 years or something, that's when you'd want to call or email me. A lot of the unit or local governments, they are not debt collectors, and they've been kind of put in this situation. They're like, well, what do? We have these outstanding loans, they're not paying on it, and we have to continue reporting. There's no money, and people want their, they should get paid for their work. So if you're seeing a lot of delinquent accounts, call me, and we can kind of discuss some options. Okay, so we're done with those 2 pages on the homeowners and their assistance and what they're paying back, or forgivable, or their loan terms or whatever. And since there was an activity this period, we need to know who you helped. So this is beneficiary data. So if you're familiar with, have you done product status reports yet?
No, we're doing those next Tuesday.
Great. So product status reports, in the old days before Amplifund, they were all paper, and they look kind of like this. I literally stole this from the PSR, and this is all the information that you need to report on that one homeowner that you helped. So it is just for head of household. So everyone that's doing Amplifund, this might look a little bit different, but some of you veterans that have been doing PSRs, this will look familiar. So head of household, this is the information you had to collect. So and this is just how they identify. So you just kind of go through all the stuff and oops. And this is all stuff that we need to report to the federal government. So it is very, very important that you fill all this stuff out for any beneficiary that you help during that reporting period. And then, so just pay attention to what reporting period. So this was January through June. You just fill out this column. And then end of the year, you would do that one. Oh, and I messed up. I should have a 1 there. We make mistakes. Okay. So you can look at this when you're doing the reports. I've had some phone calls here and there. You know, some of this is kind of maybe a little confusing to some people. So always feel free to email, call me when you're doing these reports. We can talk through it. And that's pretty much it. The only thing I'm going to mention here is that there's a note section. This is very, very important. If, let's say there's some weird expenditures or, you know, there's anything just kind of out of the ordinary, the note section is very helpful to me and to you, because when you're looking at past reports, you can kind of have a little history. So the note section, very, very important, and it might save me an email too, or you. Other than that, I think that is it.
So we're just going to stop, go back down 1 page. So we're going to talk about this next Tuesday a little bit more in depth. But like Nick said, all of this information we're asking of you, we're asked of this information from HUD, and we are putting it into the HUD database. So all the information we're collecting from our grantees and the local program income accounts, we are now being requested from HUD to provide that to them. And these are being looked at by HUD. So accurate records are imperative for managing CDBG records. So we'll go into a little bit more information on this on next Tuesday. We'll come back to it, but remember, this is still CDBG program income, regardless of if it's a reuse account or revolving loan fund, it's still CDBG money. So all of the federal requirements are applied to it that we've been discussing in webinar 1, 2, 3, 4, everything there. So keep in mind, you need to do an environmental review record. You need to make sure you're doing procurement accurately. Everything is making sense and lining up with those regular CDBG rules here. So if you find that you are serving, if you get hired by a local unit of government and you are looking at the records and they didn't income qualify households at the beginning, that's a problem. You're not meeting your national objective. You have no idea if they were 80% or less AMI. Give Nick a call. So you got to keep with those fundamentals, meaning national objective, the activity is eligible, and it's fundable. So anything else you want to talk about here?
Just kind of in actual practice in real life, program income accounts have been kind of been messy in the past, and we've been working very hard to kind of straighten them out. And certified admins have been a lifesaver for me. And so yeah, as you're working with communities and you're straightening them out, or you're seeing some past reports and you're not reporting beneficiary data, or some of your financials look weird, never hesitate to call me. I'm aware that there's issues, so we can problem solve together and straighten them out, get them into compliance.
Amber, have we received any questions?
No questions.
Okay. And then is Tom, I'm going to stop sharing my screen. Is Tom on the phone?
Yes, good morning.
Good morning. Okay, we'll turn it over to Tom. If you bring up the PowerPoint and share your screen, Amber, that would be great.
Got it. Thank you. So the program income, can everybody hear okay? The program income area is controlled by the annual action plan, our application guidelines, which are in Amplifund, by the way, DED's website, which has other program income information, and of course the administrator's manual. Next slide, thank you. So with the program income on the ED side, we've been using what's known as the NDO process, or the NDO standing for Nonprofit Development Organization. Right now, all NDOs that can be had have been created in Nebraska, so that's kind of a fixed list of those. We'll show you in a minute, including Invest, which is a statewide NDO. The NDOs are independent corporations that usually they follow the development districts. Sometimes it's a county wide economic development organization. Next slide. So program income gets created and it goes into a revolving loan fund. We're not really allowing these to be created now anymore. We're discontinuing them. But if you have a new project, a new CDBG project, where there might be program income coming back, usually it's in the form of a loan repayment from a business, then we're having it go through the NDO process where the money will be, in essence, repaid to the NDO instead of back to the local government. Go ahead, next slide. So the original problem was, without doing an NDO, you had to use the money for the same activity. So if it was say a public works activity, the money had to go back into the revolving loan fund, be reused for a public works activity or something like that. We're using the NDO process, does not have these restrictions. Next slide. So, and again, in essence, the NDO process will end up with the program income, and it will be used according to the NDO's reuse plan. We do some review of the NDOs. We make sure they're still valid corporations and have no changes. There's other restrictions on the NDOs that we review. But once the NDO has the money, in the NDO process, it becomes defederalized. And by defederalized, we mean it no longer carries federal strings as it did as when it was CDBG money. Next slide. This is just a quick chart of the development districts. Some of the NDOs include Hall County and Adams County. Actually, it's Hastings Economic Development Corp, but its service area is Adams County, etc. So go to the next slide. These development districts you're probably aware of. Go ahead.
Okay, Tom, on the prior slide, that's an outdated map. I wasn't able to find the newest map. I believe one county joined MAPA. Is that correct? You split back, Amber?
That can be. I think Cass County moved up into.
Yep, Cass is in MAPA and Lancaster is with SENS now.
Okay, so the Lancaster would be a light blue county, which is currently white, and then the Cass County, which is blue, would become like, I think that's a brownish color. Just an FYI, I wasn't able to find a new map, so thank you. Next slide.
Remember, so these are NDO service organizations, and this is their legal names, and there's actually a status report similar to this on the website if you want to look it up for any reason. But that's the list of them at this time. And remember, they're not the same as development districts, although many of them overlap exactly with that. The development district is usually an independent organization from the NDO. So West Central Nebraska Development District also maintains a West Central Nebraska Development District, Inc. NDO. Go ahead. So the defederalization process was when the state awards CDBG money to the local government, then that local government, go to the next slide, actually subgrants the money to the NDO. The NDO then makes the loan to the business. And the next slide. The repayments go back to the NDO. And then after that, that repayment begins the defederalizing process. And so at that point, the NDO now has a bucket of money. It can now make loans to businesses. And that process will be defederalized. So again, at the beginning, the money that goes to the NDO from the local government is still CDBG restricted. The money continues to be federal dollars until the NDO process occurs. And that usually means the national objective has been met, and the federal funds then are not federal dollars, and there's no federal requirements in this process. Next slide. So if there are a handful of active RLFs that are actually working towards discontinuing, but they all are managed by a local reuse plan that DED reviews. There's a contract between DED and the local government. There's also a contract with an NDO if there's one involved. Loans are made in the local government's jurisdiction. There's always a certified administrator required. We do require a separate bank account. That's a federal rule. And then there is semi-annual reporting, which includes the reporting, like Nick was pointing out earlier, details of your activities and their beneficiaries. Next slide. So just to remind you again, it's gonna be a local government RLF that's keeping some program income. And we're gonna always encourage actually mandating the NDO process. And that we're actually hoping that now we're working towards all the existing revolving loan funds, because they're somewhat problematic for compliance and so forth. We're having those possibly repurposed into other projects and discontinued at this time. That one sentence, it says it can fund slum and blight, that should say cannot fund slum and blight. But you can do retail operations and you follow your reuse plan. And by the way, if you have local RLF money and we have a CDBG project, we're now going to be looking at using that money towards that project if there's any left over, or it'll eventually be returned to the state if not used. So again, just to repeat, you cannot use this local RLF cannot be used for slum and blight. Next slide.
Hey, Tom. I just want to add to that explanation why we can't use the national objective slum and blight for the local program income accounts. It's because 70% of our funding needs to be used on low and moderate income activities. So that encapsulates the regular allocation that we get from HUD, plus all of our program income retained at the state level and the local levels. So if we did not, this would be extremely hard to track with our local levels, which is why we are only allowing the local levels to do low moderate income activities to ensure the only component for slum and blight activities being awarded is at the state level. So that is why we do not allow slum and blight, because this would mean that we would not be meeting federal regulations, and we could potentially be missing that 70% target that is a requirement of the CDBG program. So everyone, that is why we are not allowing it. We did in the past and found it extremely difficult to track because we found some local units of government were awarding all of their local program income to slum and blight activities, and it was not good. So all of your activities need to be low moderate income activities. For ED, that's low moderate income jobs for normally, and then for housing activities, that's low moderate income housing. So Steve, do you want to add anything to that, or you good?
I'm doing well, and there's no additions except when you look when you look back at the map, Butler County is now in northeast. So, but good explanation. Thank you.
So
Hey.
one other comment, can I just jump in
Oh,
there?
go for it.
Sure.
Okay, so just to remind you, when you're doing national objectives, there another rule kicks in is if you have two national objectives you could meet, you try to do the easiest one, is the best way to put it. But the regs also say that if you had a choice between LMI or affecting low to moderate income persons and doing slum and blight, you should always choose the LMI choice first. So slum and blight is like again, not used that much for other reasons. And so we always default to the LMI first. That's another reason. Go ahead.
Hey, Amber, can you go back to the slide with the diagram on NDOs real quick? One more.
One more.
So just this is Nick again. So the NDO process and everything Tom outlined, that only applies to economic development. So it does not apply to housing. So had a lot of conversation with people and they were like, well, why can't we do the NDO process with housing? There's an explanation, but just make sure that, yeah, housing program income is not following the NDO process. It's not eligible.
And just a clarification, Butler County is part of the Southeast Nebraska district, and I have gotten some emails with the updated map. So thank you guys. I will send that out to the group and maybe bring that up once I share my screen real quick. Are there any other questions that you're getting, Amber? I only see a portion of them sometimes. Okay, not hearing anything from Amber. I'm assuming she's good. So just a summary of this is program income can be generated from a regular CDBG grant where there is loan proceeds developed, or if there's a change in use in the facility. So let's say they built a senior center with CDBG dollars, and then they decided after 3 years, they didn't fulfill the full 5 years. They decided, you know what, we're going to change this and we're going to sell it to this company. That would mean it did not retain its its use for full 5 years. Program income would be developed out of that scenario. If we provided CDBG funds to a business to pay for equipment and that business did not use the equipment for the full 5 years and decided to sell it out, then that would generate program income. If you have a homeowner who rehabbed their house with CDBG dollars and they did not stay on for the full 5 years and they left in year 3, that would mean that program income would be created. Trying to think of any other examples. Steve or Nick, Tom, any other examples I'm missing that would develop program income?
So in the ED deals, it's usually loan repayments. Go ahead.
Yes, loan repayment. So if you set it up where you gave a loan to a business or to a homeowner to assist them with upgrades, and they're paying back that loan to you, that would create program income. So remember this. So if you have a program income at the local level and it's developed with an open grant of CDBG dollars, you should be applying that program income to the open grant first. So we saw in the past that sometimes local units of government would just hang on to that local program income. It should not be hanging out in a bank account. It should be used for CDBG eligible projects. So kind of keep that all in mind for this. Amber, I'm going to share my screen. I was going to show a couple of items for folks. So I will take control again. Okay, so on our website, there's a couple of resources for program income. So you'll go to Grant Administration, and here is our CDBG. Oops, did not mean to open that. Here is our CDBG manual for everyone. I'm sure you're all familiar with it and been looking at this throughout the presentations. So if you go to Chapter 8, is Program Income, it will open up here. This is all on program income. If you think there is a situation that program income was created, give Nick or Tom a call, or Steve, really anyone, give the ED a call and we can discuss it. It is better to be cautious when it involves program income and making sure that everything is being followed correctly. We also, Nick referenced that there was a update in 2019-2020 due to the floods. We provided additional guidance on program income planning tools. So that is Appendix Section 4 for everyone. You may want to take a look at that. We do have some local units of government that did repurpose their funds to be used on different activities. So if you find that that is one of your projects that you're working with a local unit of government and discover that and are a little bit out of water with it, give us a call. Both Nick and Tom can help out with that. They worked with each local unit of government when that was being developed. So then also, in addition to this, we have our 2021 annual action plan. We do have to reference program income in this, and we do each year in our appendix. So we include our program income chapter of how we are handling program income. So keep that aware. And then we also, I'll zoom in on this and hopefully everyone can see it. Per 24 CFR 91.320 K1-4, we have to inform HUD of all the local units of government that are authorized by the state of Nebraska to retain program income. So we have currently, as of the time that I submitted this annual action plan to HUD, we had 99 local units of government that were authorized to retain program income. And I believe, is it annually that Tom and Nick review them to make sure that they are in good standing?
Yeah. So, and we didn't get into this about idle accounts. Basically, we want to see that if there is a local unit of government program income, that they're moving the money. So there's some that have been sitting on, you know, like those small amounts, like I said in that one example. If they're basically not doing any activity for a 12-month period, and that comes in a report, we're trying to kind of push them to either discontinue or do an activity, just do something with the money, because we do not want to see idle accounts. That gets us in trouble.
Yeah. And so we reported on all 99 and the current balance as of the date we submitted this plan. I think this was using their December reports that were submitted. So it's very important that records are accurate. This is going to the federal government to be reviewed. And we are also normally audited by HUD every couple of years regarding program income, both retained at the state level and at the local level. So you'll see here, some of these are very large amounts, and then some of these are $356. And it's very hard to do CDBG eligible projects with a low account. So that is when you may want to chat with Nick and Tom about options and moving forward. So
just really fast, back in that appendix on, you went back to that, there is a little section there on discontinuing program income. So if you're working with a unit of local government, they have a small amount, and go to the appendix one.
Oh, the appendix one.
And they have a small amount, and you're like, you know, let's just close this account and be done with it. There are some instructions for how to discontinue. Basically, you have to have a public hearing and just make it public that you're closing the account. It's only a few steps, but normally if you're working with a local government and they have a small amount, and you think it's a good idea to discontinue, call Tom or I, depending on what the activity is, and we can kind of talk through that.
You know,
Oh, page 12, there you go.
page 12. So hopefully that all makes sense. Take a chat with the local units of government that you may be working with. Maybe you are a local unit of government official and you're not aware that you have program income. Talk with your financial division to see if they have account. Usually the account name says CDBG program income on it, or RLF. These accounts for program income can be interest bearing. That's kind of a red flag for it, because if you are receiving CDBG funds from the state from your regular grant, those are non-interest bearing. We'll talk a little bit more about that when we head into the financial training. Any other questions? Hopefully you all learned some new information about program income, and yeah. I'll see. We did receive a question, Nick, and maybe you'll be the best one to answer this. If a homeowner gets an insurance payout for work the program did, what happens with that?
Amanda, you give me a call or shoot me an email. That's kind of complicated.
Oh.
Sorry, just send me an email. We talk about that.
Okay, cool. Thank you. So thank you, Nick and Tom, for presenting on program income. Hopefully everyone's feeling a little bit knowledgeable. Overall, you just need to remember how program income can be created, and that you need to be reporting on program income and completing all the regular regulations associated with CDBG and associated regulations such as NEPA for environmental review records, procurement, monitoring. So much fun. Cool. Amber, if you go ahead and share the presentation, we'll kick off with financial training. Okay, so financial training, Steve Charleston and Katie Mailuka are joining me on the financial training. So hopefully this helps you out. We phrased this to be focused on brand new CDBG folks working within the program and things to be aware of. We will not be touching upon going into Amplifund, because that would be an even longer presentation. We do have recorded presentations on Amplifund outside of this, and we'll provide you the direct links to those presentations on it. But for this presentation, we're focused on fundamentals of making sure your records are correct and everything is in compliance. Amplifund is used to connect with the state and documenting your compliance. So cool. So we'll go ahead and get started now that we have that little disclaimer out of the way. Next slide. So if you receive a CDBG grant and it's a local unit of government, some of the first things that you need to do are part of the special conditions, and I'll bring up one of the forms from there. Is first you need to identify a person responsible for your financials, establishing accounting records, setting up bank accounts and establishing receipting procedures, and establish payment schedules and approval procedures. So oftentimes local units of government already have these in place. Normally an invoice is presented at the council meeting, then it's approved to be paid, and then the clerk or the financial officer signs the check, and then issues that to the vendor. So some of these are already in place. It's when you get a new CDBG grant, you just need to make sure that all of those procedures are in place according to federal requirements. So need to evaluate your procedures on that. And the department then evaluates how you process your financials for this. So I'm going to share my screen real quick because I do want to show one of our special condition forms for the group before we move on. So if you go to Community Development Block Grant, and we have a nifty thing called Forms and Templates, and we have one that says Contract Special Condition Forms and Templates. We have one that says Financial Management Certification. This is one of your special condition documents that need to be submitted to the department, and we do review it to make sure the local unit of government is stating that they can handle all the requirements associated with handling federal money. So they would identify their grant name, which is the local unit of government, address, city, contact person, telephone. So these are all items that we need to know if the local unit of government is aware of and if they're able to process it. So we ask them, does the financial management system provide for proper recording and accounting of CDBG receipts, control over, I'm not going to read all these to you guys, but definitely work with the financial person within that local unit of government if you are hired to be the certified administrator to complete the special conditions. This is something you should be working with that local unit of government representative to make sure they can handle it because they are the responsible entity. So that is definitely a conversation that needs to be had. The chief elected official signs this, type the name and date it. Well, I will stop sharing, Amber, and then if you could share the PowerPoint again, thank you. Okay, next slide. So there's 3 basic functions you need to be aware of. You need to be able to record all financial transactions. All activities must be related to the activities proposed in the application and approved through the Notice of Approval and CDBG agreement contract. All expenditures made are in accordance with applicable laws, rules, and regulations. Next slide. This is governed by CDBG regulations, 24 CFR 570, the super circular, 2 CFR 200, and also department requirements. So next slide. So 7 key requirements going on here are referenced in 24 CFR Part 8520, which I believe sends you back to the 2 CFR. So we have financial reporting, accounting records, internal controls, budget controls, allowable costs, cash management, and source documentation. So we review these requirements here of how you are handling federal funding during monitoring and also with submissions with the drawdown information. Next slide. Financial reporting. So you will be tracking costs and expenditures in accordance with the financial reporting requirements of the agreement. And you need to make sure they're accurate, current, and complete. Accounting records. You're needing to track sources and uses of funds, adequately identify the source and use of funds. Records must contain information pertaining to the grant, any contracts underneath that grant, authorizations, obligations, unobligated balances, assets, liabilities, outlays or expenditures, and income. Next slide. Internal controls. use established local internal controls to modify as necessary to meet standards. Internal control is a process for assuring achievement of an organization's objectives in operational effectiveness and efficiency, reliable financial reporting, and compliance with laws, regulations, and policies for all grant assets, maintain effective control and accountability. We also have internal controls that we have here at the state of Nebraska. Katie or Steve, would you guys be okay talking about one of those internal controls to give an example?
Yeah, go ahead, Katie. So internal controls within the department, you would look at when the, say for example, processing, when a request is received through Amplifund, for example, reviewed by the program representative. It's also passed on and reviewed by the financial team member, which is usually Katie, and maybe by another. So there are processes within the agency where more than one person handles the processing and approval process. There's also internal controls that are established by the federal funding source, HUD, through their funding distribution system, which the acronym is IDIS. So that data established in terms of inputting the drawdown request through that system and then processing and approval. So there's always at least 2 to 3 persons that are working through that process, if that's what you mean by internal controls.
Yep, so there's never one person doing everything. So there's normally a secondary person reviewing the work of the first. So this is to make sure that there's not a mishandling of funding. So I'm sure we've all seen the press releases of mishandling of funds, and that was determined during audit that X amount of funding is unaccounted for. Katie, did you have anything to add? Yeah, I'm not hearing Katie, so I'm assuming not. Okay, next slide. Budget control.
You guys able to hear me now?
Yes.
Okay, I think it was because I was trying to talk and Jason was like, I hear you too. I just wanted to add in for the financial. So when the request is uploaded to Amplifund, the program manager is going to review it and approve it. And then I'm going to look at the request for funds form that you guys also upload with those requests. And I'm going to make sure that everything is correct. So I'm going to make sure your guys' DUNS up to date. I'm going to make sure that we're going to pay you in the right bank account, that you guys are requesting the correct amounts. You're not over requesting for a certain category or anything like that. So I process on the financial side, and then Holly Hartman is going to also review what I entered in for that payment to make sure that everything looks correct. So we do have at least, there's 2 other people within finance that review it, plus the program reps. And that's all I wanted to add.
Thank you.
You're welcome.
So be aware of the local unit of government's internal controls that are in place. If you are talking with the local unit of government and you find Jackie from City of Columbus is the only one who sees the invoice, is the only one who writes the check, is the only one who balances the books, and is the only one who gives a report out to the city council, there could be a problem, and you may need to have a conversation with that local unit of government of you have concerns. So please be aware of that, what's going on, and definitely a conversation that happens at the beginning of the grant early on. So budget controls, by line item compared estimated to actual cost expenditures. Financial information must be related to the performance during the grant implementation. Maintain a ledger, obligations, actual expenditures, status of funding sources. We've seen this multiple different ways. We've seen it through a electronic system folks have used. We've seen it with Excel. We've also seen it with a handwritten ledger. As long as you have something that the local unit of government is using, that is acceptable and it's following the regulations. But it's not acceptable if you have nothing. So be aware of that. Next slide. Allowable costs. Costs must be allowable, reasonable, and capable of being allocated following applicable OMB cost principles, CDBG program regulations, and also the CDBG contract agreement. So compliance monitoring involves review of accounting practices, CDBG eligible activities, and charged appropriately. So please be aware that CDBG funding activities and matching activities must be eligible CDBG activities. So if they're not, then we have concerns going on. So please be aware of allowable costs. What is an eligible activity within the program and what is. So I believe Steve said this on webinar 1. If you are purchasing, trying to think, a mixer for the senior center kitchen, well, it's not a permanently attached fixture within the senior center, so that would not be an allowable cost. Now, if you were purchasing bookshelves that are going to be installed into the walls of that senior center, that is a little bit better and would be allowable because it's becoming a permanent fixture within that and would be extremely difficult to uninstall and go into a new location. So Steve, anything else you want to add to that? You always have better examples than me because you monitor a lot of projects.
Not sure how far you want to take this in terms of allowable, reasonable, and capable of being allocated. But for example, depending upon your project, purchase of vehicles is not allowable. So if you think you need to purchase a vehicle to transport items, no. We could look at if you needed to rent a vehicle because of the nature of whatever the award is, especially on the CARES Act for one, but no, it has to be reasonable. And usually if you read through 2 CFR 200 and look at those allowable and unallowables, it gives you a pretty good read on what is allowable and unallowable. Definitely can't provide benefits to those employees, such as special tickets, maybe to concerts, games, and so forth, or bonuses, payments beyond what they are paid with regards to their services. So there's a number of unallowables if you look through that.
Great,
how far do you
thank you.
want me to go?
I think that's good.
All right, thanks, Rebecca.
Next slide. Cash management, proper cash management practices must be utilized, ensure availability of adequate levels of capital, eliminate surprises, particularly the local cost share, which we often refer to as match, budget for timely progress, and meet regular cash requirements. Next slide. Source documentation. Document all costs and expenditures for CDBG and local cost share, which we often cite local cost share as match too, so be aware I might interchange those throughout this presentation. Documentation includes contracts, so if you hired someone to repaint that water tower or paint it brand new because you're constructing a water tower, then you would need to have a contract with that entity that is doing that work. So same for anything that is being used for CDBG funds. Invoices, billings, those contracts should inform the local union government of the types of services that are being hired for, and then the contract should and invoices should relate back to each other. Canceled checks, you're documenting that you've actually paid for the work completed. Payrolls, time and attendance records, and upon their availability, bank statements and state transfer records. And we'll get a little bit more into that later into this presentation. Next slide. Okay, accessing CDBG funds. Before I get into this, are there any questions that you're seeing, Amber?
No, no new questions.
Okay. So next slide. So there are some key documents that you need in order to access CDBG funds. The notice of approval, and you also need the environmental clearance, which depending on the project, 98% of the time, the notice of release of funds and environmental clearance occur at the same time. There are a few ED projects where it occurs at notice of approval. So it is very key for you to review any document notification that Department of Economic Development issues to you to see where you stand on this. The authorization to request funds form, executed professional service contracts, and then the drawdown request for funds form. Next slide. So the notice of approval, environmental clearance, and release of funds letter. Please be aware we talked about environmental review records last Thursday. Make sure that there is no choice limiting actions before the notice of approval letter being issued. And then Steve, do you want to talk about that a little bit? And I don't know if Tom is on the phone still.
In terms of choice limiting actions?
Yes.
Okay.
Just a reminder
Sure,
from
what
last
do you want to know?
Can you define what that is?
Choice limiting actions under the environmental protection policy. If you look at NEPA, in terms of the environmental protection or prevention, if you look at that, choice limiting refers to if you purchase property prior to the clearance, as with regard to environmental clearance, you have a problem. One, you have a problem because you've actually obligated, that local unit of government has obligated that property to the project, and when you go through an environmental review, you're not going to be able to not select that property, and if that property has problems with regards to any of the environmental review process under the statutory checklist, authorities or otherwise, then the project's basically not happening. So you want to make sure if you're getting into acquisition that if you need to, you exercise an option to purchase, not an outright purchase of the property. Because one, that property can't be used, and two, it's not liable for match, and you're in violation of the environmental review. So what else do you want me to?
I think that's good unless Tom wants to add anything.
The only thing I'd say is choice limiting actions, if you're not sure, call us first and discuss it. Because it could include purchase orders where they ordered work months in advance and they're not supposed to do that either, things like that. Or in ED projects, it's start hiring people. You can't, you got to wait till you have the NOA. So choice limiting actions, if you're again in doubt, contact us and we'll discuss what you can and cannot do. Usually it's going to be, you can't do it until the NOA's environmental clearance happens. Thank you.
Right, so if you go into the environmental review chapter of the manual, you'll find the information on choice limiting in terms of how it's described under the Act. So as Tom said, you need to talk to your program rep, me or Tom. It was on the housing side, someone else in the housing arena also, but the key is don't do it. And actions, it can be permanent easements also. So if you look under the Uniform Act, acquisition and relocation of property, acquisition is a broader definition than just buying a piece of property or buying other types of items. That's my comments.
Thank you. Okay, so we got a little refresher course on environmental review records and choice limiting actions. And again, that is something that is kind of talked about during application. You need to be aware of, so chat with DED on that, but it's very important to be aware of that. So another item that before a project can begin construction, you would need the request for release of funds, environmental clearance. If applicable, you may need to conduct a Tier 2 environmental review record. So if you have a commercial rehab activity or owner-occupied rehab activity, a Tier 2 normally needs to be conducted because you don't find out those addresses until after a homeowner applies or business applies to participate in the program. So normally when you receive a request of release of funds letter, that means that you have met all the special conditions listed in the CDBG agreement between DED and the local unit of government. That is your goal. We give you 90 days to do that. And oftentimes, well, not often, if it does occur that 90 days is not enough time, please reach out to your program rep and ask for an extension and give a projected time frame of when all of those can be completed. So upon issuance of release of funds letter, the subrecipient, the local unit of government, grantee, all the same people here, may draw down funds for eligible costs incurred and obligate non-admin costs. Next slide. So the authorization to request funds, and after the break, I'll pull up an example of what this looks like for everyone to see, because we do have some new folks on the call. This is a form that DED created, and it identifies the individuals who are authorized to request CDBG funds. Typically, it's the mayor or board chairperson and the clerk or executive director. Now, it depends on the local unit of government setup and how they have everything authorized. So we've seen before, I believe we're getting, is it Lexington or Columbus? The city manager is one of the people that signs off on this. Steve, you probably remember better than me. So it depends on the formation of the local unit of government. So not all local
The city of Kearney is a manager form of government that I'm aware of. There may be some others too.
Yes. So many local units of government. Thank you. So be aware, not all local units of government are set up the same way. So if you're a certified administrator and you're preparing to work with multiple local units of government, this is a conversation you need to have at the beginning, kind of them explaining their process. So definitely a sit-down meeting once you are hired is necessary, and maybe a checklist of questions here. So they need to be able to follow internal control policies for accounts receivable and accounts payable, original signatures. So we have you guys sign the form, and then upload that within the new grant management system we call Amplifund here at the department. But when we go out and monitor, we would want to see that original signature document in your files. So keep the form current. So there are elections that occurred throughout the CDBG grant implementation. So if there's a new mayor that is elected, or clerk or city manager, anyone, or someone takes a new job, make sure that that form's updated. And after the break, in like a couple minutes, we'll show you that. Next slide. Professional services contract. So this is a contract that must be executed for services provided. If the service is not being conducted by a designated local unit of government staff member, where there exists a grantee appointed position, contract for those services specific to the grant related scope of service work is required. So example, I know that the city of Beatrice, they oftentimes have a local staff member serve as the CDBG certified administrator for all of their grants. So they would not need a contract for that. But if the city of Beatrice appointed their engineer for the past 3 years, like we talked about, they should have a contract between that engineer or that CDBG work specifically, okay? We would need to see these professional service contracts for all grants, for all contracts upon execution, or when you are submitting your drawdown request to the department. So this can be uploaded within Amplifund now, and we do have specific instructions on where those are uploaded for us, and I will send you the specific guidance on that. Again, we're trying not to dive into Amplifund because it's very, it would take a 3-hour presentation, I think. So we're trying to fundamentals. Be aware of procurement steps regarding this. So anytime someone's working on a project, be aware, is procurement triggered? So it's something to always be asking yourself. Next slide. So we do have some minimum requests for funds. So when you are submitting the document to us for you're wanting CDBG funds returned to you, you have invoices to be paid, please be aware of these. So you can, $1,500 is the minimum for both general admin and project expenditures. So if you're submitting a request to us for those 2 types of activities, it needs to be at least $1,500. If it's not $1,500, we're going to say we're not processing this, and you need to incur some additional invoices before we are able to pay it. $1,500 is also the minimum for project expenditures only. So if you have a construction contract, it needs to be at least $1,500, that invoice, and normally it is. So be aware of that. $500 is our minimum for general administration expenditures only. So be aware of that. We've seen some of them come in lower, and it's just, we need it to be $500 or more. Because as we talked to you about our internal controls, we have 3 people reviewing the request for funds form. So, and that does how we talk through that. That also does not include us drawing down the funds and then doing the processing. So please be aware of these minimums. Print off the slide, circle it, keep it by your desk for when you're requesting funds from the department. These are the minimums. So if you have general admin expenditures, you're hired as a certified administrator. Some guidance that we've provided, and this is still accurate, is 50% you can request. Let's say you were awarded $10,000 for general admin, the local unit of government, and you're contracted with local unit of government for $10,000. Once you receive that release of funds letter, you could potentially request $5,000 because that's 50%. It depends on what you wrote in that scope of work within your contract. So if you're doing it by hourly wage, hourly amount, always connect it with your contract. And then also 90% can be drawn down prior to submission of closeout documents. And then once you submit all your closeout documents and they're accepted by the department, all of the full 100% can be submitted for reimbursement or direct payment. Okay, any questions? Okay, next slide.
Hey, Rebecca, we have a question that it's going back to release of funds. Is that okay?
Yeah, that's fine.
So what is the longest it has taken for any project to get release of funds? Is there a time limit in which DED flags the project, seeing that it doesn't have enough time to finish the work given the time it took to get release of funds?
Oh, I'm going to lean on Steve for this question because I only have 6 years of experience. Steve, is there a best rule of thumb for this?
You want me to read the question again?
Sure, go ahead. I was listening, but you can read it again so everybody can hear it.
What is the longest it has taken for any project to get release of funds? Is there a time limit in which DED flags the project, seeing that it doesn't have enough time to finish the work given the time it took to get release of funds?
That's a compound answer. I don't know the longest period of time to get release of funds. I know there have been cases where it's over a year, depending upon the environmental review and the change of the project, for example, location. We're going through one right now that's taken at least a year because the facility, the building being acquired, determined not to, sold for other reasons, and another site located to place a building on, structure erect, and so forth. If you read our agreement, the structure is such that special conditions are to be completed in a 90-day window. Then it does allow you to request an extension of that 90-day window. We've had a number of extensions because of COVID in terms of that disaster declaration. We've had some extensions because it took longer to start up and have the awards take place. But we've also had some that were not extended, but that were actually terminated. So when you receive an award, or if you are in process of administering a grant, you want to read the agreement, you want to talk to the rep at the state, DED. If you're replacing a person on your team, whether it's in a district or private consulting firm or otherwise individual, you want to have an understanding of where that project is when you step in. Because I know there have been some staff changes, for example, in development district staff. So it also helps the staff here if we know what's happening. So one of the key drawbacks, I wouldn't call it a failure, but silence does play a big role. So don't withhold if you think there's going to be a need to extend a project in terms of the beginning process.
Communication is very key on that. So in addition, we here at the state, we try to review those as soon as possible. I know it's oftentimes we encourage the grantee to submit them all as one package so then we can review them all at once. So we can just focus in on that. I would say it depends on the project. We have some projects that are very simple, like a planning grant, and those for the department reviewing those special conditions, it goes fairly quick. And unless we are reviewing an item and we find concerns and we send it back to the local unit of government to address those concerns. Maybe they are using outdated data for their limited English proficiency 4-factor analysis documentation that they provided to us. Maybe they are missing core components within their program guidelines for commercial rehab or owner-occupied rehab that we think they did not fully think this through, so we send it back with edits, have conversations, so then it's back in the court of the local unit of government to make those edits and address our concerns that we have, because overall we want the CDBG project to be successful and to not have problems going on during implementation. So I would say, general rule of thumb, it would probably take us after the date of submission 30 to 45 days. But again, it could be quicker if everything's great right away. Could be longer if there are concerns we notice with information submitted to us. We know that this is imperative for you guys to start your project, and we know we don't normally want to be the one holding it up, but we also don't want to just give you pass, go, and $200, here you go, everything's fine, and then we're like, well, we know that this is going to be an issue because we saw it in 7 grants in the past, but they'll figure it out. We don't want you guys to have to figure it out. We want the project to be implemented successfully. Hopefully that answered that question. Steve, do you have anything else to add on the department's review of special conditions and how quickly we get out release of funds?
One item that delays is incorrect environmental reviews. That's a significant delay factor. Incorrect meaning the selection and the determination of level of review as far as the judgment. So I would recommend that you contact your program representative when you start that process and not wait till the last minute to have that submitted and expect clearance to take place. Then the only thing I had, I think it's time for a break, Rebecca.
I think so too. Let's take a 10-minute break, so then that would get us to 10:49. And if you guys have any questions, feel free to put those in the chat and we'll get those answered. Welcome back, everyone. Okay, Amber, if you can move to the next slide. So we do have some exceptions to the minimum request here. That would be if it's the final request for funds, it could be less than that, $500 or $1,500. If an activity has not been drawn for over 180 days. And just for your reference, we use the federal system called IDIS, where we draw down funds from the U.S. Treasury. They have a notifier on their system saying when an activity has not been drawn for 180 days. So then we are notified, and then we notify our subrecipient, the grantee, the local unit of government, that entity, that they need to submit a request for funds to us so we can draw down funds. It is our goal to not have it reach that level because in addition to drawing down funds, we also need to then provide an explanation as to the reason for the delay of drawing down funds. So the goal is to set up a schedule as a certified administrator of requesting funds so you don't hit that 180-day, because nobody wants to be asked what's going on with your project, why aren't you drawing down funds? So this is very key. Also, the U.S. government takes a look at the spending of the CDBG program as a whole. It is our goal to make sure that we are spending the money a little bit quicker. So if you have drawdowns, please submit those if they're meeting threshold, because it is something that is being reviewed by the U.S. government, U.S. Treasury, on any federal funds. So they are taking a look at that. If we were in entitlement, there is a percentage of expenditure that needs to be met. Luckily, we are the state. We don't have that regulation associated with the state. However, it's something that is an internal goal of each state, is to spend quicker these federal funds. And then also, if the request is initiated by DED. So we may contact you saying, hey, we really need you to draw down funds. So please be aware of those 3 exceptions going on. Steve, is there anything else you want to add, or did I cover it? Hopefully you're back.
I'm not here.
Okay, cool.
Oh, you did it well. It's imperative to expedite if you have funds, and of course with Amplifund, you need to make sure that you package those invoices and your payments, so we're not anticipating doing 72 draws on a grant. So it's better not to do that, because I don't think you'll be able to stretch it through that time period in terms of the agreement period for completion, but you hit on it.
Cool, thank you. Next slide. So we have 2 types of payment methods, and if you printed out your handouts or if you're taking notes, this is a slide I want you to take notes on. So the first one is direct payment. So how we're defining this for our program is direct payments is the grantee, the local unit of government, receives the invoice. Then they submit a request for funds form prior to paying the vendor, because they don't have enough money in their bank account to pay for that invoice. So they need money from DED to pay for this project. So once the grantee, local unit of government, receives the funds from the state, and usually that's electronic transfer, and we'll get into that later on, they have 5 business days to issue a payment and for the vendor to process the payment. So this is direct payment. We notate that as you don't have the money in your bank account at the local unit of government to pay for those funds. So you are requesting funds from the department to pay for it. So you have 5 business days to issue a payment. And for the vendor to process the payment, they need to deposit that into their bank account. So this is very imperative if you are working with a local unit of government where they indicate, hey, we're going to be doing direct payment for the life of this grant. You and the clerk or whoever is the financial person at the local unit of government really need to have strong communication so you're not out of compliance with this 5 business day rule here. So very important, highlight this. So now here is a lovely note on where we kind of differ in our grant management system of Amplifund. In Amplifund, the direct payment reference here listed is called an advance. I asked for them to change the system and change it to direct payment, and I was vetoed. So just write a note to yourself that if you're doing direct payment in the grant management system of Amplifund, that is called an advance, okay? So, but we never issue money. Like if you say you have $10,000 of invoices projected to come in, we never provide you money in advance. You guys are not seeing my hand signals right now. You always have to incur the cost first to substantiate the need for the money. So just write a note here, direct payment is you have an invoice, you need department to send you money in the system that's called an advance. So just a lovely little note there. And hopefully if I've lost you guys, let me know in the Q&A if that makes sense. If it doesn't, give me a call, whatever I need to make sure that it's all sinking in. So our other method, which is also the preferred method, is for a local unit of government to do a reimbursement if they're capable of doing that. If they have enough money within their budget to cover expenses associated with the CDBG project, great. If they don't, it's okay. We do not state that they have to do it one way or the other. You have these 2 options. So reimbursement, the grantee receives the invoice and they pay the invoice. both the CDBG share and the local cost share. Then they request from the department to be reimbursed that funding. Does that all make sense? I'm hoping it does. So we did receive a question on this, and Steve, I'm going to attempt to answer it first, and if you want to provide additional guidance on that, great. Is it still okay to use a reimbursement method allowing the grant funds to be held in an account that gains interest? For example, the city pays the bill, then requests funds as reimbursement at a later date. So that is fine, that question that you asked. Yes, you can still do that. If you were doing the direct payment method, it needs to go into a non-interest account. You cannot be earning interest on federal money is the concern for this. But if you're doing the reimbursement method, you've already paid the vendor, you can put that in an interest-bearing account, I believe, or you could have it deposited into a non-interest one and then transfer it to the interest-bearing one, or however you guys want to do your record books. Steve, did I clarify that well enough?
So the bottom line is the local government pays first. They ask for the money, a request to the state, and that money transferring through the process or an ACH into the local government's account. That can be interest or non-interest bearing. If they haven't paid their bills yet and they need the money to pay the bills, then when that money comes in, it's to go into a non-interest bearing account. I think that's what you said, Rebecca.
Yes. So if you guys have questions, feel free. If we confused you, we can go over this again. Okay, next slide.
Because if you earn interest, you have to pay that back.
On the regular CDBG grant, okay, guys? We're not talking about program income, okay? Regular CDBG grant. Next slide. Additional guidelines. So the following must be dispersed prior to requesting additional funds. So if you have program income, you should be using those funds to pay for invoices. Again, you shouldn't have that in a bank account just hanging out. If you have it, you should be using it. It's all federal money at the end of the day. And then any federal funds on hand. So this is where that 5 business day rule is going on. So you need to issue a check and have that entity cash it, the vendor cash that check or deposit the check in their bank account. That needs to be used before you request additional funds. Okay. So grantees, local unit of government may not earn interest on the deposit of federal funds pending disbursement. Again, this is if you were doing that direct payment method, okay? If you were doing reimbursement, does not really apply to you because you've already paid your invoice. You're getting reimbursed. The 5-day rule. So if more than $1,000 is on hand for over 5 business days, the local government must return the excess amount to DED. So this is why that 5-day rule is super important. And if you're doing communication with your local contact, of making sure that they are aware of that 5 business day if you're doing a direct payment. So you need the money to pay that vendor, okay? Next slide. Amber, have we received any questions? I'm not seeing any on my end.
Nope, not on my end either.
Okay, cool. The request for funds form must reflect actual eligible costs incurred. So claim exact amounts on each reimbursement or use a rounding method. So this is something that you should determine at the beginning of the grant. How are you going to be filling out this form? Are you going to use exact to the penny or are you going to round down? If you are not a math person, and I will freely admit I am not the best math person, and I have to triple check my work on this, I would probably choose the rounding down method because then I wouldn't have to worry about cents later on. But if you are feeling confident and the local unit of government is feeling really confident on the records and keeping track of everything, you can go to the penny. Just know it really is discouraging when you get if you request funds from the department and we are looking at everything and we say, well, your cents are not correct, we will send it back. So be aware of that. Triple check your work. If you are going to that method, it's very discouraging when it's sent back because you're 24 cents off or 7 cents off. And we've done it in the past, and it's a lot of, because you have to have that form re-signed then by the local unit of government authorized individuals. So, okay. Show the status of all approved activities, even if no funds are requested for one or more activities on that request. So I'll, when we go into our example, we'll show you what this all looks like. Show proportionate local match for each activity. So one thing that you need to be aware of with CDBG funds is we want them, anytime you are requesting funds from us for your project costs, they need to be drawn down proportionately with your local cost. So the theory with this is we don't want to pay the full CDBG awarded contract amount first, and then you end up, the project comes under budget and you only pay $30,000 of your local match, but technically in our contract you said you were going to pay $100,000. That is not allowed. So we require you to draw down funds proportionately for your project costs to document that local cost share, that match amount. So be aware of that percentage. That's another thing that you should identify at the beginning of your project is what is the local match percentage for each activity that needs to be recognized with each request for funds to the department. So because we've had projects come under budget and they have returned CDBG dollars to us. So, and we reinvest those within the next application cycle. So being in accordance with the approved budget, again, you need to be aware of what is listed in the contract. We won't be providing you additional CDBG dollars. So if the project goes way over budget, then the local unit of government would need to pay for that extra amount from their individual budget. If it's going way over budget, maybe that is a conversation where you need to rethink the scope of your project. And then you would need to talk with your program representative because this has an impact on your environmental review record. It has an impact on what you're doing with procurement. And we've had some local units of government actually request to terminate their contract due to the project being too big for coming in for bid. So it doesn't happen a lot, but it has happened in the past. So that is just a decision that needs to be made. Next slide. Okay. So as certified administrators, you may be hired to work on a older grant, anything prior to 2021 right now, or use the paper methods. Before we went to our grant management system of Amplifund, we used a paper structure, so everything was done via paper. Now, beginning in program year 2020, awarded grants, we went to Amplifund, and then in late July, we migrated all of our older projects. So you may see a couple of items going on here that is different. So if you're being hired, feel free to contact a program rep if you have questions of like, what's going on with this old grant? Why isn't all the information in the Amplifund? Why, or where would the information be? So give us a call. So one of these items that is becoming a little bit historical is CDBG Policy Memo 17-02. So we issued this policy memo because we wanted to substantiate the expenses that are being requested for reimbursement and or charged against the grant prior to us sending you CDBG money that we drew down from the U.S. Treasury. We wanted to make sure that these were real costs. So if you go to the next slide. So there was a point in time with the department before I was even hired here where we had local units of government submit request for funds forms to the department, and it was one piece of paper, and we reviewed your financials at time of monitoring. And it was super easy for our local units of government. They filled out the form, hopefully it was correct, then they got the money. Within the last 6 years, we've changed our minds on that due to audits conducted both by HUD and the state APA. So they indicated we should review the source documentation prior to handing you a lot of federal money. So we created these thresholds. So if you're working on an older grant, this policy memo was enacted and applied to those older grants. So we created 2 layers. We had an annual review of drawdown source documentation by fiscal year, and then we also created these thresholds. So these thresholds were the first general admin draw, all requests over 100,000, all requests for ED projects, and if the request is 25% of the total CDBG project cost, and the final general admin draw. So if you were submitting one of those drawdowns, like you had a drawdown for $102,000, you would also have to submit to us your source documentation, the invoices, and the associated contracts, trying to think, cancel checks, anything so then we could know, is this a real expense or are you just requesting $102,000? So that is something that started in 2017. I think we have an even older policy memo from 2015. So this is something that we've been incorporating within our program. Next slide. So please be aware of that. With our new grant management system, we're requesting source documentation for every single drawdown request for funds form. Now we want you to substantiate all of the funds you are requesting from us and associated local match. So that is something new with our grant management system. It requires additional work for the certified administrator. However, we'll be reviewing your financials throughout the implementation of the CDBG project instead of at one moment of time. So please be aware that that is a change from older grants. So if you'll notice, oh, I never submit, if we request source documentation on an older grant, it's because those didn't meet the threshold and we never got anything, so we're requesting it now. But if you're working on a newer grant, 2020, moving forward, and anything that was migrated into the system till end of year, July of this year, 2021, every drawdown submitted now needs to submit source documentation. We will be issuing another policy memo is the plan, describing that, but this is what's been happening anyway in the system. So, Amber, did we receive any questions?
Hi, Rebecca. Yeah, we have a few questions. So the city is the recipient. They are receiving the funds. So the cost incurred by them will be invoiced from the development district, and they would only draw exact costs incurred, right?
Can you repeat the question?
Yeah, and there's a little bit after it too.
Okay.
The city is the recipient. They are receiving the funds. So the cost incurred by them would be the invoice from the development district, and they would only draw exact costs incurred, right?
Yes. I feel like I would love to see an example on this for documentation.
Their follow-up underneath that is, why would the development district have to submit their minute details for the city to get reimbursed?
And I'm hoping by minute details you're associating that to the scope of work. I'm hoping. So we need to make sure that they are, the work that they're being invoiced and that you're claiming aligns up with the professional service agreement within there. So again, this is us doing our due diligence of ensuring that these are eligible and allowable costs. We are not paying for a golf outing by the development district. We want to know exactly what they were working on and how it aligns with the scope of work associated with their professional service agreement. Steve, would you add anything else?
Yes, it's required. And there are reasons. The department is audited. And when we are audited, especially by the state auditor, they're asking us for, in terms of, depending upon the draw or that request within the system, they're asking for source documentation. And source documentation, as Rebecca said, is extremely important in terms of how that administrator is charging costs back to the grant. So you may be dealing with general grant administration. You may also have an agreement for construction contracting. You may also have an agreement for housing management services, and even under the CARES Act for public services. So it's imperative that we, as the agency, have the source of linking that back to the contract for those services and the scope of work that's provided.
Hopefully that answered her question. Do you want to go to the next question, Amber?
Yes, and the next one's kind of got about the few questions within it as well. Rounding down to the nearest dollar sounds like a great option, but how do we account for the discrepancy between the invoice totals and the fund request? Will this cause an issue on submitted fund requests?
So I don't believe it would cause an issue. You would round down on the CDBG dollars, and then the penny option would be applied to your local match, is what I was thinking and suggesting. But I know I probably didn't think of all the different scenarios on that. So if you have a specific one, give me a call and we can talk it through. So you would still be accounting for the total of the invoice. It's just the cents would go on to the local match.
And then similarly, on the final draw, would you draw down the remaining funds that represent those rounding discrepancies, which total a few dollars by that point?
I think this goes along with what I just said, is that you would still account for those cents, but it would be on the local match. If that, give me a call on that, but you need to have the request for funds to relate to the invoices issue associated with that request for funds. So finally, you would be able to add up all the cents from prior requests for funds. If that makes sense. I'm using so many hand gestures you guys are missing out on. Any other questions you're seeing?
So I would, Rebecca.
Yeah.
So when you get to your final financial and you're making your final draws and you're unsure, I would strongly recommend before you submit your final financial that you have a conversation with your program rep, and also we can ask for assistance from the finance team, such as Katie, so that when you do submit that, we are in a position on the last disbursements and the final financial to reject it all. I don't know if Katie has any comments when it comes to the final financial.
Okay. I'm not
That's what I
hearing
would do. That's what I would do when you get into that position, because you don't want to be off a penny.
Mm-hmm.
We've had cases where we had to reconcile in terms of several thousands of dollars because there was a grant, and within that grant, what we called an activity that's now a category anyway, the balance after everything was done was, let's say, 60 cents. And it takes a lot of work to find out where 60 cents needs to go. So if you have questions at the end, please talk to us.
Okay. I do see we have a few more questions. So as a development district with a contract with the city, the invoice that we submit to the city should include an amount and the activities. Yes, and it should line up with your scope of service that you associated with your professional service contract that you entered with the city and as a development district. So however you define your activities and the tracking of that within your professional service, it should align. And then I have a follow-up question from the same person. Is it necessary for us to include an hourly amount per activity? So I have to spell out as a contractor that I spent 8 hours on applications, 20 minutes on phone calls, 12 hours. Again, go back to your scope of work. That's what we're looking at. That's what the local unit of government has. If the local unit of government indicates they want to see it in that level of detail, then yes. But if definitely conversations need to be occurring between you, the contractor that's hired by the local unit of government, and the materials that should be submitted. So hopefully that helps and clarifies some things. We have another question. If we hire a construction contractor and he gives us a bid of $24,999 and submits his invoice listing all the work that he did, windows, doors, roofs, $24,099, we don't ask them to tell us how much time they spent on each individual activity. Steve, do you want to take that one? Do I need to repeat it?
No, you don't need to repeat it. You would want to set up your process when it comes to owner-occupied rehab or commercial rehabilitation when you get into revitalization on downtown, so that when you work with the homeowner in this case, and you work through that homeowner and you establish what you will accept as bid proposals by contractors to do the work on that unit. And then they, in most cases, will break out, and if you wish them to, break out the material costs and the labor costs to do that item. And it depends upon the amount of detail you want to begin with. So you want to set up your process and your layout in the beginning instead of going in the back end and saying, "Oh, now tell me how many hours you spent doing this on that day." That's really not what you want to do when you're getting towards the vendor or the contractor submitting a payment request.
That's for construction contractors, correct?
Well, I'm thinking of as, I thought it was housing rehab, but I don't know.
Yeah, yeah, just wanted to clarify with your answer for the group that that's related for construction contracts. So
Yes,
for professional service agreements, the local unit of government may want to have the hour breakdown exactly how it's figured out. So, okay. I think these next questions, I'm going to skip one of these questions from 1116. Amber, bring those up during the example. The 1119 one for program income and revolving loan fund section. If the city has revolving loan funds, can these be deposited into an interest-bearing account until they are ready to be used? So if you have program income, that can go into an interest-bearing account. If you are getting a regular funds from the department where we're requesting it from the U.S. Treasury and you're submitting a request for funds form, that needs to go into a non-interest-bearing account, okay? But if your program income, it can go into interest-bearing. I think that gets us covered. Okay, back to presentation mode. So we do need to see your professional service contracts. We do review these. We have caught issues within the professional service agreements, and that caused us not to be able to process requests for funds forms, making sure that all of the language within there is correct and that everything aligns. These are best practice is you currently are being required to upload these within Amplifund. As soon as you have it executed and you get a copy, I would just go into Amplifund and upload it into the file so you don't have to remember if you did it or not. But that's where we'll look to take a look at your professional service agreements in the documents folder. And so we review your request for funds form, the invoices provided. We take a look at your professional service agreements to make sure those invoices line up and they make sense to us. Obviously, if the local unit of government has already approved them, we may, if we find an ineligible cost, we might say this is not eligible and we would not be able to process it. So we are taking a look at that, and that does happen. I think Steve has a couple stories of folks getting a golf game referenced on an invoice, and local unit of government paid that, and we came and looked at that at monitoring and said that was not eligible within the CDBG program. So, so we do find things when we are looking at this as they're not eligible to be reimbursed within the CDBG program, but maybe the local unit of government was completely fine with paying for that golf game. Next slide. Annual testing. This goes back to policy memo 17-02. So I believe with the program year ending June 30th, 2021, we won't be doing annual testing. So we do need to finish out the year. So this will be one thing. If you have an older grant that requested funds from the department, we'll be selecting a drawdown. Usually it's the highest dollar amount, and requesting that. I think when we took a look at the CDBG program, we have about 30 to 40 drawdowns that we need to do annual testing on to close out the policy memo. So that is something that we'll be sending emails on in the next couple, between now and December. So please be aware we'll be requesting that information. And then you usually are provided 30 days to get back to us that information. But moving forward, any drawdown submitted in the Amplifund, you need all source documentation needs to be submitted. Next slide. Audits. So we'll talk a little bit more about this next Tuesday with reporting, but just be aware that the 2 CFR Part 200 references audits of federal funding. So one of the things that you need to think about is, did the community meet the expenditure requirement for a single audit? So for currently, right now, it's $750,000 is the threshold for any federal funds that you receive. So if you received, the local unit of government received CDBG funds, home funds from the department, but then they also received CARES Act funding directly, and then they also received a U.S. Department of Transportation grant to repave their roads, and that all totals up to $750,000 or higher. Then they need to conduct an audit. So if an audit is performed, you need to think about how did you procure that auditor? Will you be paying with CDBG funds, which I don't think we allow anymore. Steve, you updated that chapter. Do we allow you to use CDBG funds to pay for audits?
I'd have to read it, but we are not allowing. There's too many difficulties with proportional paying and such, so it's not what we are undertaking.
Okay. We'll do a double check on that, but I'm pretty sure it's not allowing. We'll take a look at the 3 pages within chapter 15 of the audit chapter and get back to you. But that should be something they're doing outside of CDBG funds. Cool. So just remember, if you're using federal dollars to pay for an auditor, be aware that you should be following the procurement procedures to select an auditor, because you're using federal funds, which are all governed by 2 CFR Part 200 to be used. So if you said, I opened the phone book and Gary's audit company was the first one I saw, and I just called him up and said, hey, can you audit our program? Not an acceptable statement. Then you proceeded to use federal dollars to do that. That would not work. You need to follow procurement procedures if you're planning on paying that auditor with federal funds. So next slide. Overall, the local unit of government must follow proper accounting practices, CDBG regulations, other HUD requirements, and NDED policies, procedures in order to ensure CDBG funds are properly utilized. Best practices: follow the practices previously incorporated to process bills. If necessary, modify them to meet the terms listed above. So definitely have a conversation with that local unit of government and the financial person. Have a good understanding of how that local unit of government does their process and make sure everything is being followed. Next slide. So Katie, can you tell us a little bit about, once we have a local unit of government, they submit a request for funds form to the department, how are drawdowns then processed?
So as Rebecca mentioned previously, the drawdowns all do need to be requested in Amplifund. So you'll go into the system and request the funds, upload your documents. Your program rep is going to review that request and they're going to approve it. Once it's approved, I either get an email directly from them, or I check a report daily to see what drawdowns can be processed. So what I do is I do a second look at the draw form that is uploaded within that request and make sure that your SAM, your DUNS number is up to date. You guys can receive federal funding. Do you guys have the correct draw number? I look at your federal identification number to see what bank account it's going to go into, and make sure that you guys have what has been dispersed to date correctly in each column for each activity. Once I review all that, make sure that the correct people sign the form, and then I will go ahead and request the money from the federal government. I request that out of IDIS, which Steve mentioned earlier. So I request the money from the federal government. A couple days later, I get the money, and then I process it within our state funding, our state accounting system, to do an electronic transfer to the entity on your guys' ACH form. So we are going to look at the ACH form next, and this is a form that does have to be filled out in order for me to know what account this is going to go into. So this is kind of, if we can actually bring up the ACH form.
I think it's on the next slide.
Yeah,
Amber,
so
we have a direct link if you want to open that up.
So I just wanted to talk about this form. The times that you're going to fill out this form would be when you're first initiating the grant. So you get an approval, you get a notice of award. We want to make sure that we have the correct bank information for you guys. So you do have to fill out the top portion. You're going to put the name, that would be the.
Amber, can you zoom in a bit? I'm getting old.
It is a little, it's kind of little. So the name would be the community that's going to receive the funding. If you want to have a specific one that's just for CDBG, I've worked with some of you guys before. So let's say our example, when we do our examples for the draws, is going to be for Metropolis. So that would be on the first line. If we wanted to have a specific bank account that just has CDBG, so you guys, they might have several accounts. They have a treasury account, they have something for roads. If we want to have one specifically just for CDBG, you'd want to put that on the second line. So you'd say CDBG on the second line. You want to check what type of federal tax classification you are. And then you want to also include your tax identification number. You want to fill out your address and make sure that the full top part is all filled out correctly. So if you can scroll down a little, Amber.
And just a reminder, the local unit of government is filling this out, and then they normally provide it to the certified administrator to then upload it within Amplifund. Yes. Just a reminder.
Yes. So we do want to make sure that you guys have a signature of who is filling out this form. On the top portion, there's two separate areas for signature, and we want to make sure both have that part. So you're going to fill out the top, sign it. Then for your initial setup, so if you're just setting up a new account and haven't received any money from the state before, we're going to do an initial setup. You're going to include your routing number and the account number. Is it savings or checking? And then you have to, some people don't put an email address, but I really encourage you to put that email address in there, because you will get a notification. So once I process the payment and we're going to post it so that you guys are going to receive that money, you're going to get a notification email saying you are going to receive X amount of dollars from the state of Nebraska, and it's usually sent about 2 days before you receive the money. So you're going to want to put that email address in there, and then you're going to have to sign again on the bottom. Print print name and date. And then you do have to include a blank check, or if you don't have a blank check, you can get a letter from the financial institution. That letter needs to include your routing and your bank account number so that we can verify that does belong to that entity. So that is when you're going to fill it out initially. So if during the time of receiving any federal funding for a project, something changes and there's a new bank account, you're going to have to fill this out again. So you do fill out the top part as you did before, and then there's that option to have change. So you're going to select change, and then you do have to provide us the previous bank account number and routing number, and then the new account. And then we'll go ahead and get that set up. So I just kind of wanted you guys to see what the ACH form looks like. And then if we can go back to the slides, there's a couple ways for you guys to, can we go back one more slide? I kind of jumped ahead. So let's say you guys submitted the request and you're wondering, where's my money? Oh, so did it go back? There we go. So how can you check the status of the drawdown? One way you can do is you can contact your program rep or myself. So you can send an email to me or call me, Katie Mahaka. It's katie.mihulka@nebraska.gov. My phone number is also 402-326-0093. So you can reach out to me and say, hey, I submitted a draw for this entity. They haven't received the money yet. Can you tell me what the status is? So that's one way. Another way, if it's been, you can check on our website, the statespendingnebraska.gov. There is a time lag on that one. So if you just submitted something, it's not going to show up for about a month. So that's probably not your best option. Another way is to request to be added to that ACH notification. So let's say the Metropolis filled out this ACH form, and they said they wanted to receive a notification that the money was coming. But you, as the administrator, want to know, can I also receive this notification. So what I would do is reach out to that local government and say, hey, is that okay with you guys if I get a notification also, and have that communication, and then send the email to me, and then I can request to have your email added. So then that way you are going to know when that money is going to be deposited into their account, and you can keep track a little bit better. And how can I access a list of all funds provided to a grantee? Again, contact your program rep or me, or you can check that website. So if you're kind of looking at past stuff, that might be a better option for you at www.statespending.nebraska.gov. You can go to the next slide. So the ACH notification, I kind of just spoke on that. Step 1, receive authorization for the subrecipient to be added to the ACH notification. You guys can have an email correspondence and then just forward it on to me. So you send that authorization document to the federal aid administrator and then identify what email you'd like to use. So then I reach out to my state accounting contact and I say, hey, can you add this email to this address book number or customer number? And they add that in there. So then I can send a confirmation letting you know that it's completed. Then that next time that the payments are processed and the deposit is, or the ACH is going to be deposited into an account, you'll get that notification about 2 days prior. And let's go to the next slide, or that might actually be it.
That is it. So hopefully that all makes sense with the group. So you can also within Amplifund, I think it'll provide you a little bit more of an update of where everything stands. But again, there is no problem to pick up the phone and give us a call. All of our contact information is on the department's webpage. I will bring that up real quick. It would help if I shared my screen with all of you. So if you go to our webpage, we actually have a contact here. So if you're trying to get a hold of anybody at the department, we actually provide you everyone's contact information. It looks like we've just updated this, so that's great. So we have all the CDBG team members here. We have disaster recovery for moving into that. Let me go into housing. Housing folks are all right here. If you need that, take a look. You have their cell phone numbers and their office phones. And then finance team, I believe you're up here. Hopefully this doesn't prove me wrong. And Katie's contact information is right here. So if you didn't jot that down, we can also send it out an email. Otherwise, you can always take a look at the contact information here. So Katie and Holly and Amy are all work on federal funds right now. So you can give them a call. Katie is our point of contact for the CDBG program. So cool. Then just wanted to talk through a little bit. We did not get to see the authorization to request fund form. I almost forgot to show that to you guys. So that is on our webpage for CDBG. And then again, forms, templates, super handy document. And we have a template here. And then let me share the Word document. Okay, so here we're going to minimize this a bit. This is the authorization to request grant funds that I referenced earlier in the presentation. You would check the box for community development block grant. You would identify the mayor, chairperson, and then the other individual, usually it's the clerk, city manager, individual to sign off, and identify the grant numbers. So you could the local unit of government may have more than one grant authorized by the department. So they might have community development, home, National Housing Trust Fund, Nebraska. You can check all these boxes indicate the two individuals, and then list each grant number that they are authorized to sign off on. Here are the signatures for those individuals. This does need to be on letterhead. If it's not, it needs to be notarized by someone. This will be uploaded within Amplifund. The original is retained at the local level, and we would check for that at time of monitoring if we conducted an on-site monitoring. Okay, so we're going to get into a couple of...
Can I add something, Rebecca? We've had some situations where, or just, you know, someone else is elected mayor. So you do want to make sure that this is up to date. So even if there's a situation where the original two people that would sign it, one of them is unavailable because they're out with an illness, and you have to have someone else sign that request for funds within Amplifund, we do have to have an updated authorization form. So there might be some situations and some times where you have to do a new one with the new person that's going to sign, and then when the original signature or the original person that was signing comes back, we'd have to have a new one. So you do want to keep it up to date. Anytime there's a change in any person that's going to sign your forms, we have to have the authorization up to date.
Perfect. Okay, thank you. Okay, so we're going to go into an example real quick. So we've been referencing this request for funds form throughout the presentation. So, and I know several of you guys have not seen one of these before in your entire life. So welcome, you are now joining the club. So just an overview, we have lines 6 through 9. This is pretty general information regarding the local unit of government. So again, as Katie mentioned, she checks all this information to make sure it is good to go. We're going to do a real world example and do part 1, part 2 together as a group. And then we have the signatures of the authorized officials that should match up with the Word document I showed you just a couple of seconds ago. And then you print out the names of each of those individuals here, and then who is preparing. Usually the certified administrator is preparing this form, and then here's their contact information. If we see issues with this form, we usually reach out to the certified administrator first to get a better understanding of what's going on or let them know what's wrong on this. So, okay, cool. Any questions so far? Okay, so we have an example. See if I drew it out correctly. And Katie is helping me with math because she's in the finance team and she loves math. So for our example, the local unit of government and NDED entered into contract for the following activities to be completed, the CDBG funds. The first is a senior center. Second is street improvements. Third is construction management. And the fourth is general administration. So that means that we gave them a grant for $385,000, and they also included match, so which is in total $125,000. So we remember how we talked about you need to figure out the proportionate amount to be drawn down funds. So I included our percentages here for each activity. So they're not the same, they're a little bit different. So keep in mind on that. And hopefully that'll make sense. Okay. Amber, any questions that we've received so far?
Questions?
No questions, great. Okay, so we've received some invoices so far to date. So I created, I'm pretending to be a certified administrator today. I created a tracking sheet to help me keep track of the project. So yours could look different. Overall, you are just making sure that you are tracking everything good to go. You might have another spreadsheet that identifies each contract that has been executed between the local unit of government and their contract for a professional service agreement. And then you also list out all the invoices you received to date and for the types of work associated with that. You can be as detailed as you want as long as you are ensuring that you are tracking what is going on financially with this. So we didn't go into that level of detail, wanted to do this together. Okay, So we've received an invoice on 7/10/2021 and these 2 additional ones on 7/1. So I'm tracking the date that we received the invoice number, and then who issued the invoice to us. And then I'm also tracking the invoice amount. So one thing to be aware of is which types of contracts have match associated with it. So we have 2 activities that have 0 match. So those are really easy to figure out. So we have LexCorp admin, that is associated with the general admin activity. They're invoicing us $10,000. So it's an easy calculation. So we also have LexCorp doing construction management. That also does not have a match requirement associated with it. So I know I'm drawing straight down CDBG funds. So I put together the lovely spreadsheet to help me figure this all out. Okay, so I do have an invoice from John Henry, and this is actually, Katie, remind me again, for example, did we pick streets or senior center? Senior center, okay. So our percentage with this our senior center does have a match compliance to it. So what I normally do is I figure out our invoice is for $25,000. So I usually do a calculation. And Katie's going to double check me to make sure I'm A-okay with my calculation. So we come up with $18,332.50. And then I usually just do this minus this. So one thing to be aware of when you are using formulas within the Excel document is sometimes they are going out further in decimal points with their percentages, and there could be, could cause a calculation error. I don't know if it would show. This one is, of course, beautiful math of even. So just be aware of that. Don't always trust your formulas. Double check that that adds up and you don't have a rounding issue going on that may impact future drawdowns. So we have, so I figured out all of these lovely items here. And my local unit of government for a practice session here decided to do a reimbursement method during this entire thing. So I'm putting together the drawdown after they paid the vendors. So they've issued the check dates on these dates to pay the vendor. Here are all the amounts, and everything is great. So at this point in time, I'm doing reimbursement. I can complete up to column N, okay? So I'm gonna add together the total amount that is we have drawn, that we have invoices for this project. So it's $37,000, okay. So since we are doing our first drawdown, we have never received any federal funds to date. So this is 0. And for our lovely example, we're not using program income, so it makes it easier. So the first drawdown, part 1, is always zeros because you've never done it before.
Yes. Right.
Okay. So here we go. Then I listed out every single one of our activities here. And we have senior center, street improvements, construction management, and general admin. So we take a look at total cash requirements to date. We split back to our prior present amount. So we only have $25,000 for the senior center. So we're going to go back to our other one, and you'll see that we have $25,000 listed there. So then we identify how much of match. Match always goes in line 2, okay? So you will have $6,667.50, which lines up with what I have here on my own spreadsheet, lining up, everything's great. So that means $18,332.50 will be drawn down for CDBG cost, which lines up with that there. Street improvements, I had no invoices associated with street improvements, so this is a very easy one. It's all $0, okay? Construction management, I only had invoices for $2,000. There is no local match associated with this, so I have a 0 here in the field. And then I'm requesting $2,000 of CDBG dollars. Same with general admin, $10,000, and then $0 here. And then this is telling me it adds up to be $37,000. That was my total of all of my invoices. And then this is also telling me the local match. And then this is informing me of when you add these 3 lines together, this is the amount of CDBG funds being, sorry, this is the total amount of CDBG.
Yeah, that's the 10,000 for admin, the 18,332.50, and the 2,000 total 30,332.50.
Awesome. So, and this is my very first request, and so I have no previously unpaid previous requests, so $0 right here. And you'll notice less federal funds on hand, so part 1, line 5. So if I had a previous request that I had not paid out yet, that would be triggered for that line, but this is my first one. I don't have any. So it's also 0. So I'm requesting $30,332.50 from the state of Nebraska for the CDBG eligible associated costs. So one good thing to note here is this is above the $1,500. I have both project costs and admin costs, so that minimum threshold amount is $1,500 for a request for funds. That is well above it. So I'm in the clear. I can go ahead and get the signed by the local unit of government. So please note in Ample Fund, you'll also need to document your expenses within there. My advice is keep your own spreadsheet going and make sure it aligns with everything in Ample Fund. It will make it easier for your program. Any questions so far, Amber? Hearing none.
Yeah, well, I think they're just wanting the Excel file that you're working on.
Yes, I can provide that.
Okay.
We'll upload it to the share file account. Okay, so sample number 2. So one thing I want everyone to be aware of is the first one is the easiest, in my opinion, but this becomes a cumulative report. So you're always building on the previous drawdown request for funds form from prior years, from prior requests. So again, I just built off of this, and I have some new invoices for drawdown number 2, and I got these all in the month of August. And I noted the invoice number, who I got it from, and then also the amount for each invoice. So let's start with the easy ones. We know admin does not have any matching. So I know for sure that the admin there is good to go. And then we also have construction management, which is also $2,000. And then I did not bring the sheet with me. Katie, was Metropolis Streets, that's street improvements, right?
Yes, it is.
Okay.
Oh, you're in the senior center column though.
Oh, thank you.
You're welcome.
See, someone always needs to double check me when it comes to math some days. So streets, my CDBG percentage for street improvements is 75. And then I normally just do quick calculation. Okay, so, and then Acme Construction, that's also.
That's senior center.
Senior, okay. Thank you.
You're welcome.
And then my senior center CDBG cost share is 73. And then Okay. So we have totals here for the cumulative amount, and we're going from this. Okay. So Katie is helping me with drawdown number 2, and I have the answer key, which is great. But Katie, this is our second drawdown. We're filling this out. Project grant funds received to date. So we take a look at our prior drawdown, and to date, we have received $30,332.50.
Correct. Yep. I did not fill that top part out. I thought it usually auto-populated, but I guess I was wrong about the new form.
That's okay. We don't have any program income. If you find out that you do have program income, give us a call. We're not going to get into it during this presentation. We can walk you through it and make sure everything's good. And then Katie, line 4, we have a note here. It needs to line up with part 2, line 3. Part 2, line 3 is this right here. So we have.
So line 3 and then line 3 in part 2 and line 4 on part 1 are what CDBG funds have you guys received to date? Like she said, like Rebecca said, it's a cumulative. So every time that you draw that money, your amount on line 3 and amount on line 2 for your program match are going to increase. So.
Okay. So I have the answer key in front of me right now, but I'm going to talk you through on how we got $105,000. So total cash requirements state. So we're talking about all the invoices associated with Senior Center. So all the invoices associated with Senior Center, when I add these column G and H, these totals together, equals $105,000. Okay. So that's where we got the number to put in right here. Let's go into street improvements. When I add up the total for these, it equals $65,000. So that's the total. And then again, to date for construction management, we have invoices for $4,000, and then for admin, we have $17,000. So you'll see on our form here, we have $4,000 and again $17,000. So line 2 is giving you, they are asking for the information associated with the prior drawdown for each one of these. Oh, sorry, I misspoke. I skipped ahead to line 3. So line 2 is the local cost share to date. So how did we come up with those numbers?
So that would be a total of your previous local match and then what the current local match would be. So we take into account what we had for local match on drawdown 1 and then the local match for drawdown number 2. So this is $28,003.50. And look at that, we filled it out correctly. So we're going to take a look at the matching amounts for Senior Center for streets now. We didn't have any street match in draw 1, so that's blank. So we're only accounting for what is match for drawdown number 2, which is $16,250. And that is documented there. So then we are also taking into account the federal funds dispersed to date, which is $18,332. So we'll take a look, what did we disperse previously? So we're talking about the last drawdown, and this number just gets bigger and bigger with every single drawdown. So we have $18,332.50 there. We see it here. And on drawdown number 1, we also received CDBG funds for construction management and then general admin. So that miraculously adds up to how much we requested in our first drawdown. So this number just gets bigger and bigger every year. It's a cumulative number for each drawdown. So next we're talking about the current cash requirements. So you're going to take a look at your amounts here. So for this one, we had a total of $58,664 CDBG costs in Senior Center.
that we need funds for. So we referenced it here. And then same with street improvements. We had a total of $48,750. So we referenced that also on our form. We need that to pay. And then $2,000 plus $7,000 construction management, general admin. So we have a total of $116,414 we're requesting. So we're going to take a look at our spreadsheet. We're going to do a double check, make sure everything's great. And I'm going to add all of our CDBG columns together. So if you look at down here, it says $116,414. So everything's great. Awesome. So we're going to go to Funds 2. This matches up. We paid all of our other funding before, so this is going to be a zero, especially since we're doing a reimbursement. So if you're doing reimbursement normally, number 5 is always a zero. Now, if you are doing direct payment and this is the first time you're doing it, give us a call. We'll walk you through this just to make sure it makes sense, because we just didn't have, there are so many scenarios that could happen with these drawdowns that it's better to start simple with the general training. So we're starting with the simplest version right now. But if you are working on a more complicated grant and local unit of government procedures, give us a call, and it's fine. We'd rather have you do this correctly the first time than having to redo it. So cool. So that's kind of where all the numbers are coming in together. If you have questions, give us a call. Yeah. Does anyone have questions, Amber?
No questions have come in.
Okay. So for everyone's peace of mind, for the test, we won't have you be completing a drawdown form. So just be aware of that. We may have you ask you to come up with the amounts, but you won't be filling out the form. So if you are doing your first drawdown and you become a certified administrator, feel free to reach out to your program rep and say, hey, I just need someone to review this. I'm a first timer, totally fine. So we will also be providing you information on this within Apple Fund trainings too. Part 6 is just a general amount for project amount. You actually get that, and that's something that's carried over from our prior forms before from Policy Memo 17-02. You are just adding up the CDBG amounts for these, and then that is $360,000. So I'll tell you how much is 25% of CDBG funds. So if you were going off of the old prior policy memo 17-02, this was a thing to tell you if you needed to submit source documentation. However, with all brand new source documentation being submitted to the department now through Ample Fund, we're requesting source documentation on every single one of our drawdowns. So this portion will eventually go away, but it is still on there because we're in a transition mode. Okay, we went over several items today, and I went over 5 minutes, but if you have questions, please send them to Amber. She'll connect with Steve and I, and we'll follow up with you on those individual questions, and we'll go over Davis-Bacon and related acts and labor standards tomorrow, I believe, bright and early at 9 a.m. And I will send out an email testing out our testing software class marker, I believe it's called. I'm testing that out, but I believe you will receive a link and you can complete that over the internet. So it's not a paper and pencil test. It is virtual on your, you'll get a link and we'll give you a deadline of like when you need to have it completed. I know there are some case-by-case situations where some folks are missing the last webinar and need to have access to the recording, we'll give you a different deadline if that's the case. But I'll provide more guidance by Friday. So sorry, we're still trying to test that out. So I wish I had a little bit more information, but it should be ready by the time next week happens. So any other questions? Okay, great. Thank you guys for participating today. Hopefully this makes a little bit of
Hey,
sense.
Rebecca,
Yes.
before we sign off, I did look at the chapter on audit, and there's very restrictive means if you want to charge single audit costs against the grant. So I would encourage them to read that chapter if they are inclined to do so, but it may not be approved. So
Okay,
I
cool.
think that's chapter 15.
Thank you.
You're welcome.
Cool. So we will see you guys tomorrow morning, 9 a.m., and we'll be talking about Davis-Bacon. Thank you. Have a good day.